Hello and welcome to this week's Market Outlook webinar with me, David Jones, and Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, September the 13th at 12:30 in the afternoon. So this is a webinar we do every week, Wednesday lunchtime, just catching up really with what's been going on with markets over the last week and what to look out for in the days ahead. So sort of interesting levels to watch, trends, all that sort of stuff for a mix of markets, indices, commodities, and FX. So a little bit of everything. I'll just put the risk warning up when I'm talking away. We also do a bit on strategy. So this week we'll talk about when to move your stop loss. You know, when you're in a position where a trade is moving in your favour. I think one of the really common things, and there have been studies done on this, where your average retail trader, their profits are about half of their losses. Maybe not quite that bad, but not that far off. So if someone makes 50 points on a trade, they're typically losing just over 90 points on a trade, and clearly it's not a strategy that's going to make money unless you're right an awful lot of the time, which again is unrealistic. So today we'll look at maybe the art of when to move your stop loss, because I think there is definitely a temptation for many of us, at least in the beginning, to start moving the stop loss far too early. So we'll take a look at that. But I think that risk warning has been up for long enough for now. So let's just flip it over to the trading platform. So this is Aondo's trading platform. This is Trade Hub. So Aondo may be better known for their sort of copy trading, follow trading, where you follow other traders, but you can also do your own self-directed trading as well. So that's the platform we're on now. I thought we'd start off because it was the Apple announcement last night. Just to take a look at the Apple share price, which is not maximizing. Let's just try that again. I mean, reading some of the reports, it seems to maybe not have been greeted with the same, sort of enthusiasm. Why isn't that working that we're used to seeing when it comes to Apple? They can now relieve you of £1,000 for an iPhone. I think that's the iPhone X, isn't it? The new iPhone. Why is that refusing to maximize? Hang on a second. Let's try a different market. Is it just a glitch with Apple? I don't think it is. Okay. Let's try doing that. And then that. Oh, that's better. Okay, fine. But I think it'd be interesting to see maybe how investors react over the next few days following this announcement. So let's take a look. Let's go right back in history, because it's 10 years, I think, since they started shipping the first iPhone. And I think there are plenty of us who maybe wished we'd bought £1,000 worth of shares in Apples at the same time as we bought our first iPhone. But going back here, so going back to October 2007, the share price, I think it was around about $18 a share, something like that. And last night it closed at 158. So we've seen something like not far off a tenfold increase in Apple shares over the last decade or so, as they continue to really just dominate this market, and then of course the iPad and everything else. So at the moment, at least, if we flip over to if we look at the trend, let's look at that big picture trend. You cannot deny what the trend is on Apple at the moment. And it has been for a number of years. The trend is definitely up. But maybe let's look at the more recent trading to maybe look at some interesting levels to watch. It was only during August, September, beginning of this month, that we saw fresh all-time highs yet again for the share price of Apple. So a share that's making fresh all-time highs just within the last 2 weeks. You'd have to be, I think, pretty brave, is one way of describing it, to bet against it. To start calling the top for Apple. So you'd have to say the expectations are that we're just going to see this share continue to push higher. We had a bit of a consolidation during the summer. We broke out to those old highs around about the 156, 157 mark, and the share price pushed up to 167. But I think we've got some interesting levels left on the way back down if we highlight those. If we're looking at, if we do see, I don't know, maybe a bit of pressure on the price over the next couple of days. We've got the old breakout level around about 156, and what's always interesting to me is really what it was doing before the breakout. You know, any potential support levels before it surged out again. You know, where people would have been buying the dips. So I think we've got this whole zone really on Apple's running from sort of 147 a share through to about 156 a share. So it finished off at 160 last night. So if it does come up to some pressure, I think it's going to be interesting to watch how it performs if we do see it push back into here. You know, I think only if we started to lose these summer lows at sort of ahead of the 140 mark, 141 mark, does it start to look like we could get, you know, a bigger correction for the price of Apple. But, you know, look at the trends. You know, we've got to be, you know, at the moment at least, we've still got to be technically, I think, a buyer of dips when it comes to the share price of Apple. But I think it'll be interesting to see how it performs the next couple of days after the announcement last night. So that's Apple. I think it's always an interesting one to keep an eye on. Let's have a look at our more traditional markets. Let's start off with pound against the dollar, because we had a bit of UK data out this week. We had that inflation data out on Tuesday. So UK inflation is running 2.9%, I think, from memory. Let's just have a look. You know, there's the move on the market. So yesterday morning, 9:30, the data came out. The pound against the US dollar was trading around about 132 in a bit, and very quickly moved up to 132.70. So this is a 10-minute candle. So within the space of half an hour, the market had put on 70 points. Because of course, you know, traditionally, if inflation is high, then the way to combat inflation is for a central bank to raise interest rates. So I can't see that happening anytime soon. But you know, we'll see. You know, we'll see. Maybe the Bank of England will start thinking about knocking rates up off their rock bottom levels. But it's interesting, I think, that inflation came in just under 3%, which is of course above the Bank of England's target. So we saw something of a surge. We saw the announcement this morning was UK unemployment. So unemployment, yet again, I think, hit a multi-decade low. But it's interesting, the reaction for the pound. You know, traditionally that shows the UK economy is strong, blah, 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 blah. But we've seen the pound under some pressure. And there could be, I think, an element of that, of buy the rumour, sell the news. You know, we've seen something of a good run for the pound this week already. So, you know, how many people were left to buy it? But if we look at the bigger picture view, it continues the theme that has been in place really for most of this year. You know, one of pound recovery against the US dollar, and of course we've seen US dollar weakness since February this year, so that definitely hasn't done any harm. But just today we've seen the pound hit its best levels since, you know, we'd have to go back to September last year. So best levels for almost a year for pound against the dollar. So we're coming off that 120 base at the beginning of this year, touched 133 earlier this morning, and I think it gives us a really interesting level to watch. Now we've seen this great recovery, so we've had a 10% recovery in the pound versus the US dollar this year, and I think the really big level to watch are these post-Brexit sell-off highs. So that was the EU referendum vote, where it touched 150 overnight. Then of course the results came in, big shock, market tanked. We saw the odd rally June last year, July last year, and September last year, but sort of 134 to 135.50, there was no conviction to be a buyer of the pound. So I think that's the obvious medium-term target. So, you know, a couple of 100 points above where we are now. And is it going to break? You can't, you know, given it's such a big level following that referendum, it seems, I think, maybe over-optimistic to see the pound just go sailing through 135. But I think that's going to be really where the battle lines are drawn, I think, for this pound US dollar recovery in the months to come. I think if we do see it, you know, regain this 135 level, then start to build, we can start looking at much more optimistic targets yet again. But I think that's clearly the big one to watch in the weeks to come, 135. But let's take a look at the shorter term stuff. Let's have a look at the hourlies, because, you know, looking at this trend, you know, the bias should still be to be a buyer, you know, be a buyer of the pound. You know, we've come off almost a 1-year high this morning, so we traded up. When did it get up there? So between 8 and 9 this morning, the market popped up above 133. We've sold off. We only sold off like 50 points. So, you know, there's an argument for being a buyer now. We've come back down to this, what is it, sort of slightly more than a week, 1 week trend line here. So I think one strategy, depending on how aggressive you want to be, buyer here, stop under there. Personally, I wouldn't do that, but maybe a buyer there, stop under the low, which is only yesterday afternoon's low, or a level back here. Either way, you know, we've been left with lots of different support levels for the pound on this hourly trend over the last week or so. So I think it's only if we start to lose maybe the 130, 150 level from sort of earlier this week that it starts to look as if we can see the market take more of a deeper sell-off. But at the moment, at least, there's no denying you know, which way momentum is pound US dollar, and it's up. So but let's take a look at the old squiggles. Let's put a squiggle on and see what that looks like. There we go. So the relative strength index, let's just change that to a 10, just because I like 10. There we go. Put that on. So again, not surprisingly, the market has been, because of the strength, pound against dollar has been pretty overbought over the last 24 hours. We've unwound that now. We've not had an oversold signal for over a week because this market has been so strong, based off this RSI anyway. So let's see what happens. But I'd suggest, you know, that maybe not this afternoon, but in the days to come, it wouldn't be surprising to see another go on sort of 133 plus. Someone's just asked a question about when will this recording be up on YouTube. I can't watch all of your webinar. I think there'll be a recording available. So I think about a couple of hours after the webinar's finished, we get an automatic email and you can watch the recording. So if you've got to duck out part of the way through, you'll get an email a bit later on and you can watch the recording. All right, so that's pound against the dollar, really strong. Let's take a look at euro dollar. Then we'll have a bit of a break and start talking about strategy a little bit. So the euro has lost a bit of momentum over the last week. But again, you know, it's only less than a week ago that the euro was at a 2.5-year high versus the US dollar. So let's just take these levels out and see where we are in the great scheme of things. There we go. I think there's still a lot of fresh air. You know, this was a big break for euro dollar when we saw it take out the sort of 2015, summer of 2015 highs at 131, whatever it is. I can't even see what it is. 117. So I think there's a lot of fresh air left up, maybe, you know, up to maybe 124, maybe even higher, 124, 126, that sort of area, which is this sort of congestion-y zone from back there. If we zoom in on euro dollar, let's just pick up on what our recent trend has been. You know, that still looks pretty much intact. I don't think there's too much to worry about yet. And, you know, again, I think that the technical view would still to be a buyer on weakness. You know, we've got support ahead of 118. We've got much bigger support ahead of sort of 116. So there's a whole band here, I think, where if we did see a stronger euro dollar sell-off, we'd expect it to bounce back. So I think, again, it's only if we lose the 116 level does it start to look as if the trend for the last 5 months or so is starting to run out of steam. So euro dollar, I think, still pretty strong. And one last one, just before we jump on to the strategy bit. Let's look at euro sterling. Yeah, we were looking at this last week, the euro against the pound. So let's take this out. How far out should we have a look? If we go to a weekly, how much do we get? So euro against the pound, we've seen, you know, quite a run this year. We're actually going, if we go back over, let's go back to where we were 2 years ago. So 2 years ago, €1 was worth 70p. Last week, €1 was worth about 93p. So that's it's a really strong euro rally. Helped, of course, we got euro strength and pound weakness over the last couple of years. It's interesting where it is now, you know, because back in December 2008, the euro never quite got to be worth a pound, and we saw, you know, big shift in sentiment at sort of the 96, 98 area. We're not a million miles away from that now. So I'd say, you know, while in the short term, the euro still remains, euro sterling, you know, still remains positive, and we shouldn't be surprised to see a bit more euro strength. You know, we need to be aware of what a big barrier this whole, I suppose, 94 to 98 area has been for euro sterling. So it's had a weak couple of days. let's look at some levels we might want to watch for a bit of a potential bounce back coming in. Let's see what the big support levels are. So this is an hourly chart. Actually, not a million miles away from where we are now. Let's take a look. So the old spiky lows before it really got a bit of a move on. Here we go. This is interesting, actually. I mean, the aggressive trade here would be, so euro sterling is 90.28 to buy. So the aggressive trade, if this was a pretty important level, this whatever it is, oh, it's 90, isn't it? Near enough, 89.96. So 90 had been a pretty important level all the way through the summer. Struggled with it here, broke through, came back. So 90 is pretty pivotal. This looks like an interesting trade, actually. Hang on a second. Yesterday, on that pound strength, because of the inflation numbers, euro sterling took quite a clobbering, and we broke that level. But we didn't see any real follow through. So it's broken a big level. Is it a false breakout? The market rallies, broken the level again this morning, but no follow through. So I think that, you know, things like false breakout or breakouts are always interesting, where when you don't really get the market following through. So the classic, you know, approach would be, okay, the market's broken a level, we're expecting it to sell off, but we haven't seen that. So is it a false breakout? So if you believed it was a false breakout, the aggressive trade is a buyer, or wherever it is now, 90.28, and a stop under that level. So a stop at, let's say, clearly this isn't financial advice, but you know, an idea for one strategy is a stop at 89.60. So you've got about 70 points risk, but the potential for maybe a lot of upside if euro sterling recovers from this. So I think it's interesting. It's interesting what's gone on the last couple of days. You know, the trend, that big trend, is still down. So if you're a more patient person than I am, you know, you might want to wait quite a bit to see how this resolves itself. But I think it's interesting that we broke the big level but haven't had the follow through. So I think euro sterling could be one to watch next few days to see how it performs if we do get a bit of a dip back. But I think the fact 89.80 is held is maybe makes it an interesting market to keep an eye on. Right, let's have a little break from the squiggles. And let's just take a look at, here we go. Is this going to work? Oh no, hang on, I know what I need to do. I'll just do a little bit of scribbling of my own here. Hold on a sec. Right, here we go. Okay, so we'll talk about when to move stop losses, because I think it's a common mistake. You know, most people, I think I did something on my website years ago now. There was a study done by a broker in 2011 where it looked at something like 4 million trades from their clients to see how they performed. And what this study found was that in terms of getting the direction of the market right, more than 50% of clients' trades made money. So it looked like that actually we're slightly better than random when it comes to forecasting which way the market's going to go. But where it goes absolutely wrong was you know, average winner versus average loser. And the numbers came out from memory. The average winning trade made about 58 points. That's a bit of a guess. And but the average losing trade lost about 105 points. You know, so it's the classic problem, isn't it? It's the classic problem where people let their losses run. So they have a loss and they hope the market's going to turn around and then snatch their profits quickly. Where of course, what we're all meant to do is let our profits run and cut our losses quickly. And I think feeding into this, because I suppose there are still plenty of people out there who don't use stop losses, but I suppose, you know, most of us, you know, if we're sensible, we do use stop losses. So I think when it comes to cutting trades, we maybe don't have that much of a problem. But I think this is where I think is the problem for many of us. When a trade starts moving in our favor, there's the fear that the market's going to take all that lovely profit away. So let's take a look at an example. Let's say we had, let's do this euro sterling thingy. So if I scribble this a little bit. So if I go, let's say we've had the false breakout on euro sterling. It's had to go again. So it looks something like that. So let's use these actual numbers. So the market is 90.28 to buy. The low is 89.80. So we might put our stop at 89.60. Now, that to me strikes me as a perfectly sensible trade to do. So we've got what's that? 68 point stop loss in this example. Okay, so let's say we did that trade and the market started moving in our favor. Now, first of all, if the market does this and just dumps, then fair enough. But we're out of the trades. We've taken our loss and we move on. But I think it's when this happens that maybe it gets a bit trickier. So the market moves ahead. Let's say the market moves to 90.50. So we are plus 22. I think this is where plenty of us maybe make the mistake of moving the stop too quickly. We think, okay, the market's moved in our favor. Let's say we've done £5 a point, so we're up 110 quid on the trade. And I think it's far too tempting, I think, for many to think, okay, I've taken on the risk, the market's moved in my favor, I'm going to move my stop to here to break even. Okay, so we move the stop up to 90.28. We give ourselves a pat on the back because we think, well, now I'm in a risk-free trade, happy days, and all I need is the euro to go up another 200 points, and I'm going to be very happy indeed. But I think the problem is, it's only moved 22 points in your favor. We need a sense of perspective here. It's completely believable that the market is going to do that. It's going to sell off, take out your stop, and then go exactly the way you thought it was going to be. So I think we just need a more objective approach for when it comes to moving stop losses. And I'm not saying this is right or wrong, and clearly I think it's right, but I think you can vary the approach. But for me, if I'm happy to risk losing 68 points in the beginning, I'm a fool to move the stop loss when it's moved just 22 points in my favor. So for me, a slight variation, I think, from one maybe trading strategy to another, but at the very least, I want the market to move 68 points in this example in my favor. So if I'm happy to risk 68, then my approach is I should not be thinking about moving that stop loss until at least it's moved the level of my initial risk. So I'd say that, and I think this does make sense, because if we wait till the market is up here somewhere, so it'd be trading at, where would it be? 96. So it'd be trading at 90.96 if it's moved 68 points in my favor. So we've got more of a trend that's developed. We're not just moving it based on market noise. We have maybe the market confirming this is a trend. We've moved our stop loss up then to break even, and then what I'll do then is just trail it up if the market continues to move in our favor. So we've seen some real strength. Hopefully we won't get it pulling back all the way back to where we started, and it gives us more of a chance of running the winning trades. The downside is, because of course there's always a downside, that sometimes the market will come all the way back to where you got in, and you've given back a relative chunk of profit. But over a series of trades, in my experience, this is a better way of doing it, rather than just trying to lock every trade in to a break-even position as soon as the thing is a few points in my favor. And over recent months, I've definitely found it's one or two trades that make a difference. If I trade maybe 3 times a week in a month, it will be one or two trades that will make a massive difference, because they start going and they just go and go and go. So you end up with, in the end, maybe 4 times your initial risk on the trade, because you manage to resist the temptation of putting your stop loss too tight. So I'd say just think about it. Think about when you want to move your stop loss. I think it's really easy to get into a trade. It's really easy to find where your stop loss is. I think that's the easy part of the trade. Clicking buy or sell and putting a stop loss on is easy. But then it's the trade management part, I think, that makes the difference. And I'm by no means an expert, but just the things that I've maybe tweaked over the years. I find being a bit more patient, giving the market time to maybe build in the direction we think it's going to go. We can end up with a much better trade than if we snatch those profits too quickly. There we go. That's the strategy bit out of the way. Let's get back on to the markets. Okay, so we've got, so I think EUR Sterling looks interesting on that level there, but the pound and the euro are both strong at the moment. I think dollar yen's been an interesting one, because there was that big level. Where is it? Dollar yen. Big level at 108 on dollar yen. And again, we had a bit of a false, messy old breakout. So we had, if we just pick it up, I think we were looking at this either last week or the week before. So dollar yen had come back from 118, come back to one. So it was up at 118 end of last year, beginning of this year. So we saw a 1,000-point sell-off in dollar yen, back to 108. 108 proved to be a big level. Market rallies 600 points up to 114. Came back down to it in June. Rallies again, and we were here. And I thought this looks like a perfect opportunity to buy dollar yen. Because we're back on the big support. And of course, lo and behold, well, not of course, but a week ago, it broke that level. We saw a half decent move through that level, but again, from this is a bigger time frame point of view than the euro sterling chart. We didn't get any follow through, so it has turned out, in hindsight, to be something of a false breaker. And the aggressive way of trading these false breakers, I suppose, is you jump on at the close of the next day. If you believe it's a false break, you're a buyer here with a stop loss under there. I didn't trade this one, but if I had, I'd have been stopped out there definitely, because the market moved, so much through that level. I'd have been stopped out. But it turns out to be, I think, at the moment at least, something of a false break. Let's see what happens if it does come back down to here. How does it perform at 107? But I think the market, to watch again this week, it has been the US stock market. I was really surprised on Sunday night. So it's massive gap higher on Sunday night. Maybe because Hurricane Irma didn't end up being quite as bad as they were expecting. But so really big gap in Sunday night for the US. So we ended last week. This is the S&P 500. So ended last week at about 63, 24.63, and then opened up at sort of 72 on Sunday night trades in Asia trade, and the market's just pushed higher. I think we have yesterday just nudged out. There we go, to fresh all-time highs yet again for the US stock market. So just confirming that big trend that we've been in for years now, and the move that started after the presidential election last year, to November last year. Yet again, this US stock market, I think, defies anybody who think it is too expensive, and continues to push higher. I don't know what else to say. It really is. If we pick up on maybe some of the recent trends that we've seen, if we go back to the sort of the post-Trump win, we did see the market have a little go at pushing below that trend line, but the fact it's broken higher, I'd suggest, means we knock the trend line back to there now, and we're back in the position where any weakness looks to be a buying opportunity. I think it's only if we take out these old lows from the summer. So June here, was that May, end of May. Didn't quite get back to it in August, but the 2400 level, clearly for the S&P, it's still a big level. It was the highs that really capped the market in the first sort of 3-5 months of the year. It's gone above it, and it'll be interesting to see if this turns out to be support in maybe the months to come. 2490 were the highs that we saw beginning of August. Yes, 8th of August. The market dribbled off a bit, but has pushed higher. So again, I think any major weakness in the S&P looks like a buying opportunity. Here we go. This is the hourly chart now. So here are the moves this week, and it really has just gone. Hasn't really looked back over the last couple of days. Let's see what happens today. But I think for the short-term traders, if you're sitting there watching 10-minute charts, I'd say it's stuff like the previous days. Sort of lows are the ones to watch. So from yesterday, what was the low yesterday? Made a low in the out of hours market at 2490. Is that right? Is that yesterday? Yeah, 2490, rallied up again, came back down to it. So I think today, 2490 is one to watch. It's currently trading at 2493. But it's a market that seems to have, this week at least, gone off to the races again. Let's take a look at the Dow. Is that done all-time highs again this week? I don't know. Oh, not quite. That's interesting. Okay, so the Dow back in August got up as high as, where are the crosshairs? There we go, crosshairs. So traded up to there. I'll switch those off. Why is it not showing me the level? Let's put a line on there so we can see what the level was. Here we go. So the Dow got up as high as 22,170. Currently trading at 22,160. 115-ish, so we're what 55 points below that level, so hasn't quite hit fresh all-time highs yet. But again, our little trend off those sort of post-Trump levels. Let's draw that in again. You know, we're still well within that trend. And again, I think like the S&P, it's only if we lose those lows from June that it starts to look like the market is running out of steam. But at the moment, at least, you know, we still want to be a buyer of dips. Be interesting to see what happens with the Dow this afternoon if we do see it under a bit of pressure, because it hasn't quite broken that level. There we go. It was in hours as well. That is an in hours level at 22,170. So let's see what happens this afternoon. Personally, I've got a trade on the S&P for options expiry this Friday, and I could really do with these markets falling off a cliff the next couple of days. So let's see what happens. But you know, at the moment, plenty of upwards momentum again this week. Let's look at a couple of commodities very quickly, and then we'll start wrapping things up. Oil, I think it's got a little bit messy. Oil after some of the clear trends we've had the early summer. So it went up from $42 a barrel, briefly above 50 in early August. We sold off back to the mid 40s, and it's just a bit chopped at the moment. You could argue, I think, that you know, I think it's still positive. You know, the correction that we have been in has gone. The market rallied, it's sold off. Really odd moves there, but maybe in the short term, oil is gearing up for another go at just above 50. And I think if we could break that 50 level in oil, hang on, does it start to look as if it's maybe breaking out of that trend? Yeah. If we manage to take out those highs from July, just above 50, it starts to look as if it's finally shaking off this downtrend from Feb, and we can start being maybe a bit more aggressive, but it's maybe just a bit too chop at the moment, oil for me. And then gold, you know, the price of gold, it's only a week ago we saw gold at its best levels since, let's take it back, about a year ago, isn't it? So gold's up at its best levels for a year. So I think that, again, big levels to watch are going to be obviously those highs from the summer of last year at 13.75 on gold. We're still about $40 away from it, but you know, again, we've got, I think, pretty clear trends on gold at the moment. Let's take this to an hourly and see if there are any levels to watch. There we go. So at the moment, you know, any weakness looks to be a buying opportunity. We've got support from yesterday at 13, ahead of 13.20. Bigger support maybe at 13.15. Really big support at 1300. So I think for now, while the trend looks like that, you know, we still want to be a buyer of gold on any significant weakness. In the short term, at least, it's looking a bit overbought on the RSI, but any correction back to here looks to be, I think, something of a buying opportunity. I think it's only if we lose 1300 does it look as if this trend that's been in place now, how long has it been in place for? Since July, you know, is really getting into any trouble. But another market that's been strong. So we'll start wrapping things up there. I think the markets to watch, I reckon, well, that EUR Sterling is interesting because of maybe the false breakout earlier this week, to see if we get something of a recovery off that. Pound against the dollar is interesting because we've had some solid economic data for the pound this week, and even though it's come off today, you know, clearly, you know, it's at a one-year high. It still looks really strong. And finally, the S&P, you know, because we've seen the S&P set fresh all-time highs again yesterday. The Dow hasn't quite followed through, so let's see what happens the next couple of days. But these are clearly markets that are still very strong. We'll wrap things up there. We'll do it all again next Wednesday. If you have any questions, my email address is in there, david@tradeafter.com, if you drop me an email. And to read a bit more about social trading and copying other traders, if you go to my website, which is tradeafter.com, there's a bit of information on there. But I will wrap things up there, and thanks for coming along, and we'll do it all again the same time next week.